Hello folks, this is Abhinay Gupta from Edupedia World. In today's lecture, we'll take up the topic that is the accounts of companies. As we have already seen and understood the sections from 128 to 134 in our previous lectures, so today we'll move ahead to the next section in our course, that is section 134 of Companies Act 2013. Which deals with the financial statements and the board's report. So section 34, financial statement and the board's report. As per the section, the financial statements always include the consolidated financial statements. When you talk about financial statements, you also consider the same provisions on your consolidated financial statements. So now we see who are the people with the authority to sign the financial statement or the consolidated financial statement, right? So signing on behalf of the board will be done by the chairperson of the board, the chairman, if he is authorized by the board to do so. And if the chairman is not authorized by the board, then any two directors, out of which one should be a managing director of the company. Right? This will be the case only when the chairman is not authorized. So either of the two, either one chairman or two directors, they will attest the financial statement, they will sign the financial statement and approve it, right? And along with any one of these, the signatures that will follow will be of a CEO, the chief executive officer of the company, and only if he is also a director of the company. Then the chief financial officer will also have to sign the financial statements, right? Because even it is his responsibility for the maintenance and preparation of the financial statements. And if there is no CFO in the company, obviously there is nobody else to sign. And even if the company qualifies to keep a company secretary, and there exists a company secretary in the company, the CS also needs to sign to give his attestation on the financial statements. So what is the point that is to be kept in mind is that among the point number 1 and point number 2, there is an or condition. That means either it will be signed by the chairman if he is authorized, if he is not authorized, by two directors, one of which should be an MD. And which is an add-on, additionally to these people, a CEO, CFO and CS of the company, if any, will also put in their signatures on the financial statement. And then when the financial statement is signed and approved, it will be passed on to the auditor. The auditor's report, the auditor will prepare the report on the financial statement, and the auditor's report, the notes to accounts, the board's report, these reports will be annexed to the financial statement, and then finally it will be issued and circulated among the members and to the other people to whom it has to be sent. Right? It may be ROC, it may be RBI in case of banking company, it may be anybody. Right? So before circulating it and before issuing the financial statement, it has to be signed by the above mentioned people, and the board report and the auditor's report has to be attached to it. That makes it complete. I hope that is very clear with you. So we move ahead to see what are the contents of the board's report. The board of directors, they prepare a report. Now what is it that they need to mention in the report, right? So the content of the board report. First thing is the annual return. Not the exact total annual return, but an extract of the annual return, which is the requirement as per section 92 of the Companies Act 2013, that has to be attached in the board's report, right? Then the board of directors will have to demonstrate, have to mention the number of board meetings that they have had. Did they comply with the provisions of the act? Did they have the minimum of 4 board meetings that were required? Were they like organized in different quarters? Whatever be the circumstance, whatever be the requirement of the act, depending upon the kind of company it is, they'll have to mention the amount of board meetings that they have had during the year. Then the board of directors will also attach the director responsibility statement. We'll separately see in the next slide the detailed content of the director responsibility statement. In the statement, the director declares that, yeah, these were the responsibilities that I had to undertake and this is what has happened out of it, right? Then it has also, when a new director comes in, he has to give in his independence declaration that he is independent. And the independence declaration has to be given in the beginning of every year, whenever there is a change or whenever the director comes in, right? Or wherever there is a change of interest. This has to be given because if a director is interested in any contract, he is not allowed to vote for that agreement or the contract. So an interest of a director plays a very important role in this case. So the report of the board of directors will specifically mention, will specifically have a clause whether or not all the board members have given their independence declaration. Now, and if the company has a nomination and remuneration committee, then the policy as per the nomination and remuneration committee will also be declared in the board report itself. It will include the company's policy, director's appointment, director's remuneration, right? Including the criteria of determination of their qualification, their positive attributes, independence, etc. All these things form part of the policy that will be drafted by the nomination and remuneration committee, right? They look out for all the nominations, who will be the director, who is the eligible person to get the promotion, right? And what is the remuneration? That is a reasonable amount, which is not too high that it becomes a burden on the company, and which is not too low. It has to be moderate so that it motivates your employees to continue working and also encourages them to work more and earn more. Right? It has to be based on the performance. Apart from this, the board resolution will also include the comment of the directors on the qualifications that have been given in the auditor's report or the company secretary report. Right? They'll have to explain the qualification, if any. Like being a qualification in an auditor's report is not a very positive point for the company. But if there is any, then the board needs to explain as to what the qualification is and comment why is it there, what is the impact of that qualification, will it hamper the interest of the investors, right? So how can it be rectified if it has a severe impact? These things have to be explained in the board's report, because the board report goes along with the financial statement and the auditor's report is also attached to it. So the shareholders will obviously see to the qualifications, and that is the point when they have a question for the board of directors. So the board report has to include those comments and explanations beforehand. And also as per section 186, right? Section 186 deals with the loans and investment of the company. The company has to maintain a register for the loans and investments that they have made or they have taken. Like 186 is an important section because now, if you are aware, the company is not allowed to give out loan to its directors. Right? That is considered a very big issue these days. So we'll deal with section 186 once we get into the next chapter where we have it. So over here, all you need to know is that particulars of the loans that they have taken, the guarantees, the investments that they have made, the particulars has to be mentioned into the board report. Obviously only for the material ones. Next is section 188 register, that is the register of the related parties. It is the duty of the company to identify who are the related parties. Right? As per AS 18, they'll decide the relation, whether or not the person is considered a related party, and then they'll have to maintain a register of all the related parties that the company have. And then they will also have to mention the particulars of the contract and arrangement that they have with the related parties. Right? The board report will also state the state of affair, company's affair. Right? They'll also give out the amount that they propose to retain back out of profit, the amount that they propose to declare as dividend. So these things will also be mentioned in the board report, and they'll also whatever they recommend to be paid as dividend, that will be mentioned in the board's report. Now, subsequent event is also an important aspect of the board's report, because after the balance sheet has been frozen, like at the end of the calendar, the financial year, the balance sheet freezes, the accounting stops, and that is when we rule down all the transactions and then prepare the balance sheet, the P&L, and finalize the account. And then it takes a little time. And after a span of time, the director's report is prepared. So maybe within that period, from the date of finalization of the financials till the date of issue of board report, there may occur a subsequent event, a significant event, right? So if there is any change that has taken place during that period, it has to be informed in the board's report. It has to be specifically mentioned in the board's report, right? The board report will also talk about the conservation of energy, the technological absorption that they have made, the foreign exchange that they have earned during the year. These things, we'll talk about detail about these in the next class. So even that will be mentioned in the board's report, and it will also contain the risk management policies, etc. Now, the third point was the director responsibility statement. Come on, let's see what are the contents of the director responsibility statement. We have already dealt with section 133 and stuff, which talks about accounting standards, which is a mandate to be followed while preparation and finalization and presentation of the financial statement. So, director's responsibility statement is a statement where the responsibilities of the directors are mentioned. How much have they met? What have they done? Right? So they have to mention in that statement whether they have complied with the applicable notified accounting standards or not. Okay? Because it is their duty to prepare the accounts as per the notified accounting standards. So whether or not the task has been achieved, accomplished, has to be mentioned in the director responsibility statement. Next is the accounting policy selection. Now, the selection of accounting policy lies in the hands of the directors of the company. They have to decide as to what accounting policy will they follow, right? That has to be very prudent. Their judgment, their estimates, that has to be reasonable. They'll have to reason out and explain the basis behind them considering the particular accounting policy to be followed, right? Like for example, depreciation. You can follow WDV method and SLM method. For maintenance of inventory, you can follow the FIFO method or the weighted average method, whatever it is, right? So, sorry, FIFO or LIFO. So it is the responsibility of the board to see if they have prudently applied the accounting policy, and such that those accounting policies summed up gives a true and fair view of the state of affairs of the company and the profit and loss account, right? Next is the maintenance of records. So the director responsibility statement should state whether the directors have taken proper and sufficient care for the maintenance of the records of the transactions that have taken place during the year. Maintenance of the accounting records specifically that we're talking about, right? They also have the responsibility for proper and sufficient care of for the safeguarding of the assets, the physical assets of the company, right? And also for the prevention and detection of the fraud and irregularities that exist in the company. So this is the responsibility of the board of directors. And the director responsibility statement has to consist of the clause specifying whether or not they are or they have been delivering their work, they have been following the responsibilities and taking up the charge, right? As we know, as per AS1 also, going concern is a basic assumption that has to be followed. So it is the responsibility of the director to look into the matter and specify whether or not they have applied the going concern presumption correctly, right? They also have to mention whether they have laid down internal financial control and whether that is adequate and is operating effectively. And the point is, what is an internal financial control? Internal financial controls are basically the internal controls that are applicable on the financial front of the company, right? It is the basic control that the company has to establish so that they don't miss out on anything, right? The stronger the control, the better is the output. So the internal financial control, it is basically the policy and the procedure that the company has adopted. Adopted for what? Adopted for orderly and efficient conduct of the business, right? Adopted for proper safeguarding of the assets, adopted for preventing and detecting the frauds and irregularities and the errors that have occurred or that are potential to be occurred, procedures and policies that would lead to an accuracy and completeness in maintaining the accounting records that will help in timely preparation of the reliable financial information. So this is what the internal financial control actually looks up to. So these are the internal controls that have been designed in such a way that the assets will be safeguarded, the fraud can be avoided, irregularities can be avoided, right? The transactions can be taken up more confidently, right? There is an efficient conduct in the overall business. In their responsibility statement, they will also need to disclose as to whether the directors have devised a proper system for the compliance with the provisions of the applicable law in the country at that point of time, or law for that industry, for that specific segment for that point of time. And they also have to see whether such system were adequate and operating effectively throughout the year or throughout the period concerned for the financials, right? So I think that will be enough for the lecture. So this is Abhinav Gupta signing off. Thank you so much.